Hello, everyone. Welcome everyone to the Erwin Cito Show, where we discuss the truths about real estate investing. Here we bring you repeatable, systematic methods to invest by successful action takers, like today's guest from the Financial Garage. They actually go by FI Garage. I had to check actually if it was F1 Garage, but it's FI, short for Financial Independence. And they're already semi-retired. They're semi-retired and living off the proceeds of their investments. But before we get to this week's show, I'd like to thank those who have left reviews for the show, mostly on Apple iTunes. I honestly don't know where else you can leave reviews. Apple's by far the most that's where most of our reviews are. I don't think anywhere else even like make up 10% of our total reviews. Anyways, thank you for everyone who's messaged me with kind words. And with it being the holidays, I've been asked many times what I'd like for Christmas, and from you, all 16 listeners, nothing makes me happier than a 5-star review, so that the internet gods may do their algorithm thing. Skynet will shine favor on the show, hopefully, and make it more visible to more everyday Canadians in search of practical means to reach financial independence. Preferably ethically and morally correct financial independence. There's perfectly nice ways to make money. We don't have to resort to underhanded methods at the expense of other everyday, kind, nice, and friendly Canadians. I've written down as a goal for 2022 to grow the listenership from 16 listeners to 22 in honor of the year 2022. Let's never talk about the number 19 again. That's a growth of 37.5%, which seems impossible, but many of our real estate portfolios did the same in the last year. And who knew that was possible? So let's see if we can make it a repeat. Speaking of everyday Canadians in search of financial independence, one of my old childhood friends called me this week to let me know that about the revised ROI, return on investment, new projection on a real estate project that he got into on my recommendation. I happen to be in the same project. Him and I go way back to elementary and high school. His wife was my roommate in university for just 1 year. And he was in my wedding party. We're that close. Anyways, we're both investing in the same private equity housing development. It's a project north of the Greater Toronto Area between Newmarket and Orangeville, for those who know or are in the know where those things are. The builder, so the builder who is, who's developing land, selling the properties, they're going to build everything as well at Svengate. And they are big time for those who are in the know of housing in Ontario. Anyways, our revised ROI over a 9.5-year period is, first, to provide context, this is one of the best projects this private equity group has ever done. So it's well above their typical. Of course, history does not repeat itself. Returns past does not predict the future. The revised ROI over 9.5 years is 819%. Yes, that's 819%. We've both been invested since 2015. So full payout is expected in 2025. These are my RSPs. For both of us, these are our RSPs anyway, so we're not in a hurry to see this money back. My friend regrets, he lets me know he regrets not putting in more money, but I did the math. I was driving when he called me, and I did the math. I still managed to triple task, drive, be on the phone, do mental math. And I said to him, your return is over $400,000. That has to be enough to put your kids through university. I think you owe me dinner. Scratch that. You owe me a round of golf at Wooden Sticks. My friend, end quote, my friend told me there's another project coming up northeast of the GTA, Greater Toronto Area, Stouffville, for those who know Ontario a bit, that he'll be investing in, and Cherry and I will likely invest in too. If you two are interested, again, folks, past does not predict the future. I don't expect the same returns, but if you are interested, simply email us at iwin@infinitywealth.ca. asking about, just put anything in the subject line around private equity, real estate developments in my team, and I will point you in the right direction. I personally only invest in 2 private equity funds, 2 equity companies, maybe that's the correct term, 2 different private equity companies. One is focused in multifamily apartment buildings in Ontario, southwestern Ontario, cities really close to me, mostly Cambridge, Ontario, and Hamilton, Ontario. And the other one, as I just mentioned, the one I just mentioned, they only do real estate developments. I only invest in their projects in Ontario. These two companies are the best I've found personally, and I also use their returns, their projects as a baseline to compare all opportunities that come my way. Being someone who's been in real estate since 2005, being part of this community for quite some time, more than most, I get a lot of opportunities sent my way. I don't, considering I only invest in two, you can imagine how many I don't invest in, because again, they have to be as good or better. And all I ask in return is a round of golf. I'm just kidding. I'm only asking for a 5-star review. And if you can include in your comments what you've learned from the show and how it's helped, that is thanks enough. That, and along with telling your friends about this show. On to this week's show, we have two regular guys. One is a mechanic, another is a soon-to-be retired accountant. The mechanic's actually semi-retired already. They host a financial independence garage podcast, FI for short, FI Garage Podcast. They're both under 50. The mechanic's under 50. The accountant's under 40, and they have a lot of financial security thanks to their multiple streams of income beyond just real estate, and largely achieved from their frugal lifestyles. The mechanic and the accountant, they are pseudonyms, of course. They don't share their names. They do share their faces. If you're watching YouTube, these shows are posted to YouTube as well, to protect their privacy from their employers. And you can guess, and as you can guess from these are their pseudonyms are descriptive of how they made a living, how they make a living, how they used to make a living. So on this show, they share how they've achieved financial independence from work, details of their real estate investments, including out-of-province investments. Note they're located in BC, so we have some left coast folks on the show for first in a while. I love BC. That's probably not entirely accurate. I love Vancouver. It's my favorite city in Canada. I can't wait to get back out there. Maybe enjoy a beer with these guys. So we talk about so they invest out of province as well. They invest in the middle Canada, if that's the right term. They do private lending. They are capital partners as in joint venture agreements. They stock hack. They do crypto. They do fractional real estate via Addy Invest. They both share one investment each, real estate specifically, that did not go to plan, and the lessons they learned from it. So please, folks, listen to these lessons, what went wrong, the red flags that they saw, so that you too may add them to your own toolbox skill set, so that you don't make those same mistakes. So you can find them. You can find the Financial Garage on pretty much all the social media platforms, and of course, they're in the show notes that I post online and in my email newsletter. Quick disclaimer: all three of us are consuming adult beverages containing alcohol in this episode. If that doesn't tell you that none of us are licensed to hand out financial advice, then I don't think anything will. We are sharing our experiences only for educational purposes. Past, of course, does not predict the future, unless it's real estate, which always goes up. I'm just kidding. It only goes up most of the time if you do it right. Please enjoy the show. Mechanic, accountant, what's keeping you guys busy these days?
Hey, Aaron, thanks a lot for having us on your show. It's
Thanks for coming on.
Yeah, it's different to be on this side of the microphone. The accountant and I present on FI Garage, and I'm also on Explore FI Canada podcast. So as you know, podcasting keeps you busy, even though we're making just like hour-long shows. So that keeps me busy. As you know, we're going to talk about some real estate today. And I think that even though I'm kind of on the more passive side of that, it definitely keeps me busy staying involved in it. And right now, I have an investment with Epic Alliance in Saskatoon, which is keeping me very busy because there's some legal issues to work through right now. So
oh no,
yeah, it's okay, but it'll all work out in the end. Okay. But other than that, I kind of do a little bit of part-time work. I was formerly a helicopter mechanic, and so I still dabble in a little bit of that. But I consider myself Coast Fi, so I'm on my way to financial independence and just try and keep busy and earn enough money to pay the bills each year.
Amazing. An accountant? What's keeping you busy these days?
I have been pretty busy managing my rental properties. I do a bunch of options trading these days as well. And I actually will be leaving my job not too long from now. So I'm hoping to free up a whole bunch of time, and I'm sure I will be keeping myself very busy once that comes through.
Well, you're leaving your job, but all we talk about is starting our own brewery. So yeah, we're going to be
Well,
pretty
and
busy.
brewing beer. We brew a lot of beer.
Right. So before we started recording, so my understanding is your show started really you're just broadcasting your regular around the keg garage conversations. Please elaborate.
Yeah, basically, the guys would come over to my house here, on a Friday afternoon, and we might be brewing a batch of beer. And I had my good buddy, the economist, who is an economist, and my other buddy, the accountant, who is an accountant. And I wanted to learn about investing, and the accountant's always been into real estate, so he could teach me a lot from that. And we just have like friendly guy banter in the garage, and we were learning lots along the way, and we're like, you know what, guys, let's just get some microphones. We just enjoy drinking beers and talking about this stuff anyway. Let's share it. Let's have some fun. So that's how it started.
That's awesome. I think a lot of people on the show listening to the show can appreciate they don't really have those support groups.
Community is a huge thing, and for us, as we got sort of deeper into, we're a bit more in the financial independence space. It's Financial Independence Garage, right? So there's really been a growing community. I'm sure a lot of your listeners have heard of the FIRE movement, right? Financial independence, retire early. And of course, real estate's a great way to get there, but it's not the only way. So there's just a lot of discussion, and such a good community to be involved in because everyone wants to share and learn.
Yeah. And I think it's really important too that it was such a taboo topic to talk about money for so long. But a lot of these investing ideas or different money habits or things like that, it's important to have people to bounce ideas off of. And I think that community is really helpful for people when they're going along their financial journey.
And actually, to that point, I believe there's some cultures that believe you shouldn't talk about money. Even if you have money, especially if you have money, you shouldn't be talking about it. Like clients of mine, for example, they had no idea about the multi-millionaires they had literally living on the other side of the fence from them. They own like a dozen commercial plazas, right? They had no idea.
Well, and that's what I find so interesting is, so we're never supposed to talk about money, but how are you supposed to learn about it?
Yeah.
It makes no sense.
You learn about everything.
Yeah, exactly.
Right. School didn't work out for the money-making part, but
No, it didn't.
Well, I think it's, it becomes our narrative, right? Because we're influenced by, our parents, the discussions we had with them, the mindset that they had around money and investing. And, you can see I'm in my 40s. So my parents were of that high interest rate generation when they were trying to buy their own house, and they weren't really property investors. So I didn't learn anything from them on that side of things, right? So you're right. It's the classic sort of millionaire next door. I grew up in Richmond, just south of Vancouver, and I had no idea about real estate, but I saw the change in the property values in, Vancouver and the greater Vancouver area. And I wish I knew more. It's one of those things you look back and I go, geez, if I knew what I know now back in my 20s, I would have somehow scraped up a down payment for some sort of revenue property. It just, it's good that this conversation is happening. Like the accountant said, it's becoming more widespread. It's not as taboo. We're sharing, and it's going to help everybody along the way.
Yeah, I can agree. Like thinking back to my early 20s, like all that was ever put in front of you was mutual funds.
Yeah, right.
Exactly. High fee mutual funds.
Right. And then if you get around with a bunch of guys in a garage, like, okay, go around. Okay, who's made $1 million doing mutual funds? Who's actually retiring off these mutual funds?
Yeah, exactly. No, not with the high fees that the banks charge. I'm happy to own bank stock though. They can pay me, but I don't want to pay their fees. Yeah, I think it's like you just said there is it's a lot about sharing the ideas, and you look around and it's not always just one thing. I think, we can all agree on this show that we're invested in different areas, right? Real estate is a facet of my portfolio, but I think it needs to be balanced out with, some index ETFs. Like the accountant mentioned, we're into some options trading for cash flow. The more you learn, the more educated you get in all these areas, you can sort of compile a nice basket of hopefully, somewhat diversified and uncorrelated assets, right? So to give you more protection in the long run.
So most of the people who will consume this are listening, so they can't see you. So yeah, it's a quick silly comment. I don't know many people over the age of 40 that say FIRE. Usually they're under 30. And if they're over 30 and they're saying it, it's because they already started saying it when they were in their 20s and they only became 30 more recently. Like, isn't it like a young person acronym? I picked it up because my friends on Facebook and Instagram talk about FIRE, and that's how I learned about it. Same thing with house hacking. I only learned that recently from my young friends.
Well, I don't know. I could argue that anything less than 65 or maybe even 60, is retiring early. And I really don't want to go down the path of the whole retirement, quote unquote, because I hate the connotation that brings to people. I just read an article in the Globe and Mail the other day about a friend of mine in Quebec she admittedly said she's not FIRE. She's in her early 30s. As you said, a lot of people are trying to achieve it in their 30s. But the article made it out to sound like she was done. She was retired. And as we discussed before the show, Erwin, we're all people that are listening to your show and people that listen to our show. They're driven to learn more, and they're driven by doing things. We enjoy doing things. We enjoy projects. So even if I don't do my trained career job anymore, I'm going to have things that keep me busy, and earning the money side of it, that's a bonus. And sometimes that motivates us, but doing it because you want to do something, to me, is what the FIRE movement's all about. It's giving you the choice.
Yeah. And at the end of the day, I mean, retirement is just some silly concept to me. I mean, whether it's real estate investing, index funds, options, whatever you're doing, is you're accumulating assets. And the greatest asset you have is your time. So the quicker you can get control over your time, I don't care how you do it, that's the greatest asset you can have, because it's your most limited resource.
Yeah, and in that way we have more resources than Warren Buffett, because I don't even know how old he is, but he's in his 90s.
Exactly. Yeah.
Well, ask Warren if he would start at $0 today to be 20 years old. I guarantee you he would.
Yeah, ask him if he'd give up $5 billion for just to get 20 more years.
Yeah,
I'm pretty sure he'd take it.
Yeah, for sure, right? Well, it's interesting the accountant brings up, the time thing too, because in the FI community, there's always a lot of discussion. When it comes to real estate, a lot of people are so hesitant about getting into it because what they see it as is something as work and time, right? So one of the things that I've tried to focus on is developing real estate investments that are very, very passive. Now, accountant, you manage your own doors. So what does that look like to your time?
Not that bad. People always, I don't know, Erwin, if you get this too, but people always make it seem like it's such a big hassle managing properties. And if you don't do the job right, it definitely can be. If you don't screen tenants well, if you don't head off problems. But at the end of the day, I have 4 rental doors at the moment, and I would say it probably takes maybe 5 minutes a month of my headspace. And then the odd month, something will break, like an appliance, because they build appliances to break every 6 months, apparently now.
Come on, you got 12 months out of it.
I got 12. Well, yeah, I just had a dryer break after 12 months. It was literally 2 weeks after the warranty had expired.
I had that happen too, but I'll do you one worse. It was a combo washer dryer.
Oh no,
so the whole thing had to be tossed.
Yeah, just done.
No more combo washer dryers for me.
No, that's a kick in the pants.
To your point, I think first off, people misjudge the amount of time that it takes to manage property, and then what I find generally people miss is hourly rate, right?
Yes.
First off, they should understand what their hourly rate is that they actually get paid. So you say you get paid $50,000 a year, you work 40-hour weeks, roughly you're making $25 an hour, right? Like I remember one time there was a windstorm and it like pulled part of an awning off one of my properties, and I couldn't get anyone to deal with it because it was still partly attached to the house and it was flapping around and it could fall on someone. My tenant has 4 young kids, so someone had to get out there. So I got out there, right? So it took me 2 hours to deal with it. I brought my own tools to take it down, right? Because I couldn't have it fallen on somebody. So it was like 2 hours, and that was like the first service call I've done in I don't know how many years. And like, you guys own property. How much did your properties go up? Right? So say
astronomical.
It's astronomical. So back like 5 years ago, properties were going up like $2,600 a month, right? So say that's what my property went up that month. It took me 2 hours to deal with it. That's $1,300 an hour.
Pretty hard to beat that rate.
Yeah. How many people are saying no to $1,300 an hour? right? So people need to think of it in that terms if it's worth the grief of working 2 hours, right?
Yeah.
Versus getting paid $25 an hour in their job.
Well, and so many people, oh, what if I'd have to, go clear a toilet, or, there's plumbers, like it might reduce my return a little, but I make one phone call and somebody's at the property dealing with it for me.
Yeah, just to clarify, I haven't dealt with a toilet like ever.
Yeah,
myself
me either.
Personally.
That's one. Somebody tells me there's a problem with the toilet or plumbing. Yeah, I'll plumber's on his way.
And for anyone looking for a job, you want to be a plumber, you're going to make good money.
Oh yeah, yes you will.
Even the tradespeople say that's the shittiest job.
Yeah, pun intended.
Though technically, being an electrician, I believe, is one of the more dangerous jobs.
Yes.
So you guys mentioned several investment vehicles, strategies. Could you kind of elaborate how you split between all of them? Like, is like real estate like 30%, 60%, and then like stock options is 10, gold is 10, Bitcoin is 20, whatever? Could you like give some rough guidelines?
Yeah, I'll take that one to start with here. The account.
Sorry, not guidelines. Like, how are you personally investing?
Yeah, well, we always caveat our shows with this is for entertainment purposes only, and just our opinion. So yeah,
because we're here drinking, people. For
exactly.
The listener doesn't know, but we're drinking. We're heavily inebriated. Do not take this as advice, please.
That's right. This is not financial advice, and that they know that if they go check out our show. But yeah, for me personally, I was late into the real estate side of things. I was using publicly traded REITs as my initial vehicle to gain real estate exposure. So, basically at the beginning, my portfolio would have been, probably 90%, I'm just going to call it a mixture of a basket of ETFs that are globally diversified without going into too much detail on that. But yeah, about 10% in private REITs in public REITs to start with. Since then, that was probably 5 years ago, I have added a private REIT, which is here on Vancouver Island. And I have bought 2 doors in Saskatoon. And what else am I doing? I'm doing private lending. So I kind of group the private lending into real estate exposure as well, because I'm in second position on those mortgages. So right now, real estate is probably closer to 40% of my portfolio.
Yeah, and I would say I was probably 5 years ago 100% real estate.
He's gone the other way.
Yeah, I've tried to diversify out of it. So I bought my first house when I was 20. I'm 32 now. A friend and I bought a house just because we didn't want to pay rent. And back in the day, you could get a 40-year mortgage with 5% down. So it was pretty easy to get into it.
Those were the days.
Those were the days.
Yeah.
Rented out rooms to friends, had a suite in the basement. I think we ended up paying, it was like $300 a month was our total cost for operating that house for about 3 years. And then I sold out of that and kind of have moved through different investments. And then in the last few years, I kind of learned the error of my ways and how overweighted I was in some areas. And I made some plays for cash flow that didn't have the appreciation tacked on, that really didn't work out well. So I've sold off those properties. I'm down to just 2 properties now in Victoria. And then I'd say realistically, based on the value of my houses now, I'm still probably 75% real estate. And the other 25% is in a mixture of ETFs and kind of dividend paying stocks, and as well as my trading account. But I've been trying to get the stock portion of my portfolio increased a little bit, but Victoria is pretty much the same way as Vancouver. We've seen prices skyrocket. So every time I make progress on the portfolio side, the gains on my real estate outpace it anyway. So that percentage just keeps growing.
Terrible problems to have.
Yeah, it's rough.
Very, very bad problems to have. We should acknowledge our privilege for sure. But interesting thing that the accountant brought up there from a cash flow perspective, I think that's more where I'm investing these days because of what my position is. That I'm looking for higher cash flow investments, and I've shied away from the local real estate here just because I can't make the numbers work. So that's why I ended up going out of province into Saskatchewan, because I could make the numbers work for a higher cash flow play there. It does come with the risks, and the accountant is well aware of that. We've had many garage conversation about his experience out of province, but I don't think it should necessarily scare investors away, right? It's just that you need to know what it is that you want to get out of your property, right? Everybody's had fantastic appreciation in the the primary markets in Canada, and can we expect that to continue? I don't know. None of us know for sure, right? I mean, the looming possibility of rate hikes could change, that dynamic as well. So for me, it hasn't made sense to go into a long-term play that has a lot of appreciation and mortgage pay down, because I want to live now with cash flow. So it's changed how I look at my real estate investing and what products work for me that fit into my portfolio.
Got it. Now can you share what didn't go right in the prairies?
Yeah, so I bought what appeared to be a amazing duplex in Winnipeg. I don't know if you've been to Winnipeg. Anyway,
none of us have.
I hadn't been. I had quote unquote done my research, and I had figured out that I could get a duplex in Winnipeg that rented for $2,000 a month and cost $200,000. So the 1% rule in Canada, right? It's pretty much unheard of. So I bought the duplex, and all was well. I was, getting my $2,000 a month of rent, and I had my property manager in place, and everything was fine. And my property manager, unbeknownst to me, was no longer with the company. So I had a new property manager who did an absolutely tragic job. I think I had an axe taken to the hydro service to my house twice. I had people throw bricks through the windows. I had a couple tenants just disappear and leave the entire place trashed. Now, whether this was the demographic of where the house was in Winnipeg, also partly due to my property manager being useless. Either way, at the end of the day, I ended up almost breaking even, but the high cash flow allure was quickly eroded when you had to start paying for all the repairs and maintenance on what was going on with the property.
So the truth about real estate is often the nightmare stories start with, I never sell the property.
Yeah.
Yeah. So new listeners, oh boy.
Yeah, it did not work out well. Like, I did fly out to Winnipeg and tour around
after.
So before I bought.
Okay.
And I think I just underestimated how bad the demographics of the area were. Oh. Like, it was the north end of Winnipeg. It's really not a good part of town. I walked around on a sunny fall day, which probably gave me a false sense of what was actually going on there. And yeah, just doesn't always work out.
Yeah. Sorry to the people in Winnipeg, but the accountants offended lots of towns in Canada before, so that's nothing new.
Yeah. I'm sure there are nice places in Winnipeg. I just didn't invest in them, which is my biggest mistake.
And I bet you every city has the same story for an investor.
Yeah.
Someone from out of town invested in the rougher part of town. Deal went sideways.
Yeah.
Actually, the last time this came up, gentleman came on the show, didn't see the property. It was like an hour north of Montreal. That house burnt down.
Oh man.
And here's the kicker. He didn't know, but after the house burnt down, like, say your house burns down in like Victoria. What's the lot worth?
Enough. Lots.
Right? More than I paid for it these days.
His was worth $20,000.
Oh, all the value is in the structure?
Yeah.
Oh, geez. Yeah, that's bad.
Yeah. Best guess is that someone had bribed the appraiser, and then not knowing the market, then the investor would never have known. Right.
Yeah.
Like, how far away from you do you have to find a lot for $20,000? So obviously something's not good.
Yeah. I think we'd have to go to the very northern tip of Vancouver Island. Like, maybe you could get one in Port Hardy for 20, but that's probably still stretching it.
So my point is, like, if you don't know the market, you didn't see the property, like, that's often how these bad stories start.
Yeah. Yeah. And I think too, you can get I got distracted by the high cash flow, which was really appealing, but it was a D-level property, which is why it offered that level of cash flow.
Right.
And I wouldn't recommend to anybody that you go to the D level of real estate.
Right. With F level tenants.
Yeah, with F level tenants. I mean, all of my units in Victoria, I would say, are at a minimum of probably like an A- unit. And because of that, I get A+ tenants, and I don't ever hear from them or have to deal with anything.
Do you think it would have been different if you actually lived in Winnipeg and you had the same property and the same issues? Do you think you would have been able to get ahead of it and still keep the property positive?
Possibly. I just don't know Winnipeg well enough to answer that question, but I that would have been a big difference. That's the other one, is I don't think that property managers that you've only met once and you don't live in the same city as and can't check up on nobody's gonna care as much about your property as you are.
Sorry to hear about your loss.
Yeah. You live and you learn, right?
I'm the only guy that got lucky out of that whole story, because I was actually going to be an investor with the account in that house. I'd gone to the mortgage broker, I'd gone to the bank, I had it all lined up, and he denied me. He's like, I've actually gone in with my brother. And I was like, really? Okay, fine. And then all this happens in the end. I'm like, wow, I sure
so you're
got
welcome.
lucky missing that one.
Wow. So how have the last 2 years worked out for you guys? Like, you guys are like accountant, you're talking about leaving your job. Mechanic, you're already out of a job by choice. Like, like I see in the news all the time, like it's been a tough 2 years for a lot of people. You guys are talking about freedom.
Yeah. Okay,
I would say I think it has been a tough 2 years for a lot of people, and I want to acknowledge that. And I've just been in a very fortunate place that prices jumped right after. So there was kind of a block, if you remember, during COVID, and I want to say like March, April of 2020, where people were not leaving their house. And I happened to go through the house that I live in now, that I'm sitting in, during that 2-week block where nobody went. So I was the only offer on this house, and that's unheard of in Victoria. You don't get where you're the only offer. So I managed to land this place, sell another one of mine. Rents were jumping up, property values were jumping up. And I kind of hit a perfect storm of, right after we had closed on this, all of a sudden property prices were up, the market was moving again, everybody was looking for somewhere to live, everybody wanted out of condos into houses, which happens to be what I own. And I had a build that was in the works for quite a while, and that kind of finished up right, I think August of 2020. So all of a sudden I added an extra unit onto a property, and it was just kind of the perfect storm of rising rents. I got to refinance everything at historically low rates with unbelievably high property values, and it kind of all just fell into place.
That's awesome. And sorry, when you're talking about that build, is that the carriage house you were talking about earlier?
Yes. Yeah. The carriage house. So I have the first house my wife and I bought here. We bought it and we gutted it. We put a suite in the basement, lived upstairs for a while. And then in Victoria, depending on your lot specifications, you're allowed to build a carriage house in the backyard. And because that house is a corner lot, I was able to build a carriage house out back. So I've now got 3 units on that one property. And I luckily had a friend who's a contractor who does that kind of work. So having a buddy who can build it for you is definitely a big win too.
Can you share what the rents are on this building? Now a triplex? Essentially it's a triplex. No.
Essentially it's a triplex. Yeah. So I'm getting $1,950 a month for the carriage house, which is a 1-bedroom brand new build. And then I'm getting $1,800 a month for upstairs, which is a 2-bed, and the 1-bed downstairs I'm getting $1,200 for. So that works out to almost $5,000, $4,950 a month plus utilities.
And let's just say that house is located within 10 minutes of the downtown core of Victoria, just for location specifications. Yeah.
Are you going to invest in more of these?
The problem is that house is now worth, $1 million. It's not the sub 500 that the account paid for it 7 years.
Yeah,
7 or 8 years ago.
I think it was 7 years ago. And it was wall to wall shag carpet. Like I'm talking shag carpets in the bathroom, the most disgusting house you've ever seen. Nobody wanted it. It was listed for like $395. And my wife walks in and she's like, yeah, we're not paying that for it. I'm like, all right, well, what do you want to offer? And she's like, we're offering 340. I'm like, well, that's pretty low, but all right. And so they come back and they're like 375. She's like, no, we're going 345. I'm like, don't we want to come up a little? Like this is going to be a pretty long run deal. And she just hard nosed, like, nope, we're not moving. So I think we ended up getting it for like 347, probably put 50 into it on the initial reno. And then I think we were into the build for like another 175. And yeah, it's probably worth 1.2 to 1.5 now, 7 years later.
Sorry, the build, that's 175, that was 175,000 for the carriage house?
Yeah. And that happened to just time out before I had bought all of the materials, before lumber prices went crazy with COVID. Like I think today it's probably a $225,000 to $250,000 build, but
if you can find people to do it,
if you can find anyone to do it
or two.
Yeah.
I think we need to interject here. And, you know, Erwin, I heard on one of your previous shows that you're reading Annie Duke's book, Thinking in Bets.
Yeah.
And one thing, she's also coming out with a new book, The Science of Quitting, which I'm super interested in reading. But I think what we need to acknowledge here is that luck plays a big part in real estate. You know, the accountant had bad luck in a bad situation, and he's also had really good luck. So I'm not saying you haven't done your due diligence and thought about, you know, the finances and the build and all the rest of it, but we should all acknowledge how luck plays a part in our success and failures.
Correct.
Well,
but you do have to make a bet.
You have to make a bet.
You have to make a bet
to participate.
And I think that's the big one, is like we bought that house with the plan on renovating the basement, putting in a basement suite, and living in the house and having the basement suite pay part of our mortgage. And by the time we had finished renovating the house, the basement suite rent had gone up so much that it almost covered all of our mortgage. It was like, oh, well, that's great. I didn't expect that. I thought it would just help a little bit with reducing our living costs. And then the city of Victoria puts out its new garden suite policy, and you're allowed to build a carriage house. And you don't know what can happen that can be incredibly advantageous. People often like to focus on what could go wrong. And I mean, that entire house, that entire property is just a story of what could go right.
That's fantastic. So apologies, I'm a bit of a real estate geek.
Yeah.
Could you elaborate on the carriage house? Like, sorry, you said one bedroom is like, it has its own furnace and water heater, air conditioning.
Yeah,
one story.
So it's fully separate, one level. It's got its own patio and its own little garden. I kind of fenced off the backyard. So it's probably, I think it's 650 square feet. And then it's probably got about 100 square foot like outdoor patio living area with a door off the bedroom and off the living room, kind of patio doors onto there. And then a little front entranceway that's probably another 100 square feet. So it's completely self-contained. It's essentially your own mini house.
You've got private access off the side of the corner lot for that too, don't you?
Yeah, it's its own private access, so they don't have to access it through the other house on the property or anything like that.
Is this only available to corner lots, or?
No, you're allowed. It's based on lot size and lot coverage in Victoria.
Do you need laneway access as well, or does it just matter the size of the lot?
It's just about the size of the lot. So if you have a standard, mid-block lot, then it has to be set so that it can be seen from the front of the house. So it has to be offset and can't be completely buried behind the main house. But you are allowed to do that.
Okay. So what would the lot size have to be? Do you know what is like a 50 by 120 type lot size that's required?
I think it has to be over 6,000 square feet, but don't quote me on that. I forget what it's been a while since I did the whole plans and drawing up of everything, but somewhere along those lines.
Got it. We're all keen on this subject here in Ontario because it hasn't quite come yet. It's in battle up in Barrie, Ontario, where they were allowing it. Now they're back and forth on what they will allow.
Yeah.
A friend of mine told me that they wanted at least like 3 meter setback from the lot line for the.
Yeah.
Like, that's crazy.
Yeah, it's crazy. Well, and so I'm in Victoria proper, but in Greater Victoria, there's a district called Saanich that allows it. But in Saanich, you have to sign an affidavit saying you're living on the property in order to build it. And anybody else that's like, then you go resell the property. Well, the only way you're allowed to have the garden suite is if you live on the property. So you've taken investors out of ever owning that property.
Right.
So I don't know what they're doing there, but it doesn't seem like a good move.
So
Because you don't have housing supply issues, right, in Victoria?
No, of course not. It's not like we're out of land or anything because we're on an island.
Right. Real estate prices are just magically going up because there's no supply issue.
Precisely.
Oh, got it.
It's exactly what I was going to ask you, Erwin, because it sounds like the same issues out there. It comes down that we all can recognize that there is a housing issue, right? And that by providing smaller, affordable housing, especially close to downtown areas, makes sense because there's all these legacy lots that are huge that can be rezoned. But the accountant, how long did it take you to go through and get the paperwork and approval to get this done? It sounds like it's the same problem that you have out there, Erwin.
Oh, it's worse here. You're not getting it done here. Accountant, how long did it take you? Like,
it was a year and a half with the city, almost 2 years to get a building permit.
Crazy. Like I'm speechless.
I eventually went in during like February of COVID, or maybe the start of March of COVID, and like wouldn't leave City Hall until I got to talk to somebody about the building permit. And it finally came down to that they wanted me to move the water box where I had the new water line coming in like a foot to the right. Like, you couldn't have just told me that like a year ago. Like, I don't care. Why did it get held up for this long? No one could bother telling me this.
It's been extensively discussed on the show, and the challenges in just doing anything, getting anything done with our local governments.
Yeah.
Yeah, well, we're going through the headache now. We've been looking into getting a manufacturing license for brewing beer if we're going to start our own brewery. And the hoops and the hurdles and the things to get that done, like accountant, you've been looking into it a little deeper than I have, but you're at least a year out. Like, how do we start small business and create, business in Canada when we're just faced with these roadblocks? And it seems to be in the real estate sector as well as in small business. It's difficult. Policy is difficult to navigate.
Yeah, it's.
Sorry, is your plan to like build like a brewery and actually start selling beer?
Yes.
like a true small business, like something a serious income that you guys can potentially declare an income stream?
Yeah, well, we've been shopping for real estate for quite a while, right? We both own a private residence, and the accountant has some doors, and I've got some other investments, but we've been actively looking for commercial space and industrial space. And as you know, and your listeners will know, it's super hard to find. It's hard to make the numbers work, and stuff's getting snapped up. And you're like, how does that multiple make sense? So the accountant and I, we're struggling because we can't find what we want close enough to our homes in Victoria to make it a hobby business. Let's be honest. We're not trying to be the new Phillips brewery or anything like that. But it's been a struggle because for us, it makes more sense to own our own building and develop it, and then have portions that are rented out for other commercial use or industrial use. But it's just impossible to find. So we're constantly looking at lease rates, and accountant, you've been doing all the work on that, and it's hard to make the numbers work from that perspective as well. So it's the brewery idea is just something we're passionate about, that we can turn into a business enough to just support ourselves. But yeah, the property is really what we're driving to get the underlying, right?
Yeah, I don't know if you guys saw the headline yesterday. Hope I don't quote me on it, but I believe it is in the Globe Mail just yesterday. Today is November 11th. The article is saying how Montreal office space is actually back to pre-pandemic levels. Even though commercial vacancy is the highest, has increased, it's like 13%. So I'm talking about prices,
right?
Prices of office space, because it's just been dragged up with all the other real estate that's gone up in value.
Yeah.
Right. And it sounds like you guys are experiencing the same thing.
Well, and especially for us, like, it's such a zoning issue of, this particular building is only allowed to have like a flower shop in the bottom, and the second floor has to be offices, and you couldn't convert that to anything else. And any of the decent buildings don't even hit market in Victoria. Like, I'll see things where I'm like, that building just sold, like something new's going in there, and you talk to people and they're like, oh yeah, that was sold months ago. It just didn't hit market because there is no supply whatsoever of mixed use or commercial or anything like that here.
Yeah, actually, for the new listeners' benefit, that's actually very common in a lot of real estate. A lot of, especially bigger transaction properties, they don't go to the public market. they're what we call pocket deals. So often whoever is selling the property knows someone who is looking to buy. It could be the seller themselves, or it could be the agent that's doing it. So again, it doesn't see that. Not many people see it, or they're specific in who they shop it to.
Yeah.
So I have a question for you guys, because you guys are doing pretty well for yourselves. But if you could do it all over again, what would you do differently?
I would have used other people's money sooner. It's such a cliche thing to say that, for sure. But my mindset was more of a scarcity mindset from my upbringing. So I was very, very debt averse. I didn't understand how you can use leverage to benefit, to make deals, to get ahead. So it took me a long time to get to that stage. So if I could go back and tell my younger self, it would be, like we talked a little bit about, think in bets, learn how to use leverage and get started with it, and have a long-term plan.
Sorry, Mechanic, when you see other people's money, is that other private investors, or is that the bank?
Either way, right? For me, it was, I used my HELOC for leveraged investments in real estate. But yeah, I think if I'd learned how to be the working partner in real estate deals, I just didn't know that side of the business at all. I didn't realize that I could be I'm a very handy person. I'm a helicopter mechanic. So I would have been good at being the working partner to help guide renovations. I do all the work on my own house and things like that. I just didn't know it was an opportunity for me back then. So, that would be using an investor's money, or in fact, the accountant and I, because we were looking at small businesses, you realize that the Small Business Bank of Canada is open if you have a good business plan and you can present to them, reasonable financials and, things like that. So I just didn't know enough, and I didn't know that there was ways to borrow money and put that money to work.
Yeah, the BDC is giving us extremely favorable terms. We just bought more office space. It's
nice.
Better than anything you can get from any bank.
I had no idea
government.
And I had no idea what BDC kind of offered until I think it was a few months ago that we were on a call with them. And I was like, if I had known this was an option 10 years ago, I probably wouldn't even have become an accountant. I would have just started a business. Like, they're willing to provide most of the capital for this stuff.
Yeah, government.
Yeah.
We'll give credit where credit's due.
Yeah.
Hopefully their investment is wise in us.
Yeah, let's hope so.
For the taxpayers' benefit. Sorry, accountant, what else? What would you do different besides going to BDC for money first?
I think I would have just taken a little more risk, to be honest. I've kicked myself. There's so many buildings that I looked at and I thought about buying, and I hesitated and I didn't pull the trigger, or I didn't make offers because I hadn't fully figured out where I was going to get the money for it from. And a bunch of these buildings now I look at and like, I could have got them for a third of what they're worth now, and the cash flow off of them. I mean, there's one right by the triplex that I purchased, and it's a 7-plex. And before I bought that house, it was for sale for like $500,000. And I was like, I'll have to do a bunch of work. And I was like, I thought of all the things that could go wrong, and I didn't make a move. And that would be cash flowing my 10 grand a month right now if I'd bought it. So I think the biggest lesson is just, at some point you can overanalyze, and I think you just got to make moves, and you got to learn, and you're going to take your lumps sometimes, but you got to push forward.
It's something I don't tell my beginner investors, but it's kind of a lesson learned in how I've seen so many people successful. You need a little bit of ignorance to be a real estate investor.
Absolutely. I think a little bit of ignorance is key.
Yeah, and a lot of faith in yourself that you'll get it done.
Yeah,
that's a highly common trait among many super successful investors I know. Like mechanic, just because you're a mechanic, a good friend of mine, Ryan Carr, kind of a funny, his last name is Carr, but he is a mechanic also. He actually worked on armored vehicles though, but he's one of the most successful real estate investors I know. So he started watching YouTube, figuring out how to fix stuff in houses, started fixing up houses, flipping, and now he does big stuff.
Nice. Yeah. That's fantastic. And honestly, your show, our podcasts, YouTube in general, there's so much information out there these days that if anybody has the interest, you can go and learn, like, and you can network. Networking is the best thing to do, right? We know that from all of us, and the communities that you build locally and nationally too, right? We don't hear as much about the Ontario market, but I was doing a lot of research there with Rachel Oliver and getting into rent to owns, right? I know you've had her on the show as well. And it's just, I think it's just broadening your network. And like you said, your friend who's the mechanic, he just got in the right circle and networked with the right people, right?
Yeah, he hustled hard.
Yeah.
Yeah. Actually, mechanic, you were talking about some passive deals. Can you share some details around it and maybe some numbers as well?
Yeah, it's a bit of a sensitive topic right now, and I just want to be careful how I speak to it because there's some ongoing issues with it right now. So, but basically, it was the Epic Alliance, which is based in Saskatchewan and Saskatoon, and they offered they call it their hassle-free landlord program. So it worked well for me because what they offered was a 15% return on your down payment. So you own the house. I own the house there. I have 2 doors to a split level, and I get I sublet it to them. They are my tenant, but they manage the property for me. So it was a good deal for me because it's a straight cash flow deal, the 15% on that down payment, and I've been very happy with it. It's been fantastic. I get paid every month. I pay the usual bills that every landlord pays: the insurance, the property taxes, and the mortgage. And it's very hassle free for me, which is exactly what I wanted. And the initial purchase price was $400K, so it was in the right ballpark for me with what I was willing to invest. I used leverage money as the down payment, so that's an added level of risk for me, but it was worth it to arbitrage what my cost of borrowing is on that. So yeah, that's kind of been the passive deal for me for the last 8 or 9 months, and I've been very happy with it.
Excellent. Is this something you'd recommend to others?
Well, that's where I have to be careful how I speak to it because I talked about it on our podcast before, and at the moment, because of the some of the issues that they're dealing with, I just don't want to make a recommendation either way. I've been very happy with it, but that's where I'm going to leave it.
Got it. So I was actually watching one of your YouTubes, and you guys were actually just talking about Addy investments.
I'm glad you brought that up.
Yeah,
I'd like to talk
I just
about
had
that.
Steven on the show. It's only been brought up to me recently. I don't know much about it. It sounds fantastic from a high level. Again, I don't know anything about it. I don't have any money in it. I haven't gone further into it.
It's funny you ask that because I do have money in it. And I don't bring it up as an investment because anybody that listens to our podcast knows that the accountant and I kind of dabble in a lot of little things, right? So, I don't consider, small bets. I don't consider a $500 property investment in Addy like a real investment, okay? And not to overshadow, like, yes, it's money and it's important, but it's not going to move the needle in the long run. Because we are involved in all sorts of investing, we enjoy it. And for me, it's like I don't know. It's being involved and having a small amount of money in there helps me pay attention, helps me stay on top of what's happening in Canada. So there's Addy, but also in your neighborhood, there's Buy Properly, which is a very similar type structure, right? They're trying to do fractional real estate in Canada. And it's an interesting topic because the accountant and I and the economist, we've talked about this a lot because we've seen it be successful in the US and we've also seen it fail in the US. But the problem is their market is just such a bigger scale that it kind of makes sense. And their property values, they can get some super cheap property values in some of their secondary and tertiary markets, right? Whereas in Canada, we're looking at these, primary, even secondary markets to divide up these properties and make fractional real estate real. You can't get a secondary market for these shares, right? Like you've got a fractional share, but you can't do anything with it. You're stuck holding it, which is fine. If you're in long term just for appreciation, then it's okay, right? The thing with Addy, and so I've got 3 properties with them. I was in on the initial deal, which was a Trout Lake property in East Vancouver, right? I don't have anything bad to say about Addy, but I was recently actually having a long sort of chat, like text chat with their support. And I said, hey, I haven't seen a lot of updates on this property recently. And, one of the things that concerns me is that they've started charging a annual fee, right? Which they didn't used to. So it's only $25, which really isn't the issue to me. The issue is that they only allow you to have a $500 investment now. So the pitch is that they're bringing real estate to the masses for as little as $1 per share of the limited corporation, right? Well, that's fine, but unless you're investing, call it $5,000, so you got to be in 10 properties at 500 each. Before that, $25 actually makes sense from a management fee type perspective, right? So that's one of my issues that I have with it. And then the other thing too is that I've had a house in Vancouver for the last 3 years and I haven't seen any appreciation. How is that possible? That hasn't. Well, exactly. Okay, you go to. We've talked about this a lot, so you go ahead.
Yeah. So I've been known to say some controversial things, so I'll just throw stuff out there that this is always my opinion. But I tried to do this. Like before Addy had made Addy, I wanted to bring the same concept, and I could not make the numbers work in any way, shape, or form in which either the investors didn't make money or the company didn't make money. I could not make both groups make money. And I don't see a way where, okay, if I'm letting you buy into this property for $1, what are the administrative fees on that dollar? It's going to cost money. You're going to have astronomical returns from your property in order for both the company of Addy to make money and your individual investors to make money. And I don't think this is one of those scenarios. I know the Trout Lake property. I know what they're trying to do. I've based out numbers on what they're trying to do. And I don't see any situation in which both Addy and their investors are going to make money off of it.
Yeah. Don't take us the wrong way. We're not trying to, speak badly about Addy. We love this idea. We love the idea of fractional real estate. We've dug really deep into it. I think it's something that eventually will make sense when there's a secondary market for your shares of real estate. But at the moment, why not just be in a publicly traded REIT? It's way more transparent. You know all the numbers. You're getting a broad diversification of properties. Like it just makes more sense for me right now.
And I don't see with our regulatory environment how fractional real estate in Canada works right now. I hope that changes because I think it's something. I mean, my original idea was, people are complaining about not being able to afford rent and not being able to afford properties. Well, what if as a landlord, you can sell off portions of your property to your tenants and now they're vested in that property and they've got a reason to stay and they've got a reason to take care of it. I mean, I think it could serve a lot of purposes in helping with stuff, but I don't see on some of those development properties how, like, I think the administrative fees from having that many different people into a project are just going to outweigh the advantages of it.
Right. Yeah, I had Steven Jagger on the show just last week. I believe they've upped the max limit to 1,500. He mentioned it a couple times.
Okay.
And yeah, we're early days. Like this is so early. For example, someone sent me a Realtor.ca link to a listing, a real estate listing. It was for $3,200 for a condo in downtown Toronto. What you're buying is a fractional ownership of 2.5% of the condo.
Right.
Like, okay, how like you're talking about administration fees. What are the administration fees for this?
Yeah.
So yeah, we're early days. I can't claim to understand it. We're early days.
Yeah, I think it's got a long way to go before it's going to be both beneficial for the company and the investor involved.
Right. And like you said, regulation, administration costs, like there's lawyers, there's transactional costs. Like, yeah, I don't understand. I mean, I can't clean understand it. I'm not talking bad about anyone, but yeah.
No, well, that's the thing. Maybe they've figured out the things that I couldn't figure out, but I just don't get with all those administration fees, how you make it work.
Because I'm always worried about customer service levels as well. Like I personally like to pay for service.
Yeah.
And just to hear, like, for example, as the end consumer, the service looks great as an Amazon customer, but they have so many complaints amongst their employees. It's so sad.
Yeah. Well, one of the things too that, as we've said, we think it's has potential. We're early days, as you said, Erwin, but it lures people in that don't really understand anything about real estate. And they're using a lot of, as with a lot of investments, they're using historical data. They're saying, hey, we're seeing 40% appreciation in the Hamilton area. That's where we're buying properties. You can buy a property for $2,500, and your expected returns are like, it's the same in anything, right? Your expected returns are X. So people are going, oh, honey, we don't know anything about real estate, but look, we can get 40% returns for $2,500. And it's like, well, of course we're going to get into that. But there's not enough education yet and understanding, like you said, of what the underlying is and how it works.
Yeah, folks, get educated.
Yeah.
But I feel bad about saying that little healthy bit of ignorance is a good thing.
Yeah.
Like this whole NFT thing, I'm just like, I
Oh,
don't
man.
get it.
Hey, we minted our own NFT. I can sell you one.
Yeah, that chalkboard drawing behind you. You should NFT that.
We should. That's my wife that did that. Yeah, she actually minted a little NFT. But yeah, we went down the whole NFT. I've been trying to buy an NBA Top Shot NFT for like months. It's like impossible. We had a guest on our show, Courtney Steven, who's an ex-Hamilton player, and he was talking about. We talked a lot about crypto and NFTs, and he got me onto this NBA Top Shots thing. And I've been trying to buy one because they're selling for ridiculous amounts, but it's totally speculative. It's fun.
Yes, let's call it that. It's fun.
It's fun.
You know what else is
yes.
fun? Going to the casino.
Yeah.
Right.
Yeah.
And we know what kind of investments those are.
Exactly.
But yeah, and to me, for the listeners' benefit, my understanding of NFTs is these are collectors. Think of these people as being collectors.
Exactly.
Yes, you
Yeah.
could buy the Mona Lisa today and it could be worth more tomorrow, but again, you're speculating, right?
Well, my entire perception of the whole crypto NFT blockchain thing is like, we're early days of the internet. Like something useful is going to come out of this. And I've been trying to do a lot of reading and paying attention to it. And it sounds like a lot of this technology has very usable stuff behind it, but I don't think we're anywhere close to knowing what. I mean, you didn't know that Amazon was going to be Amazon. We don't know which one of these programs or technologies is going to be the thing that wins. And I'm not smart enough to figure that out. So I'll gamble a little bit, but that's it.
Well, we can close the loop a little bit here because it's interesting that you brought up NFTs because accountant, you and I have talked about this before, and this ties into the fractional real estate as well as could NFTs become the smart contracts that we use for fractional real estate?
I think it's totally possible. It's just,
Yeah.
again, what's the secondary market look like?
Yeah.
Well,
it's,
but that's the thing with blockchain technology and NFTs, it's a non-fungible token, right? So your ownership of a property or whatever the NFT is minted as, it has a history, it has a sales history. It's as good as the history you have of the investment property that you own. It's got potential. Who knows?
Mm-hmm. Again, I'm too early into this. It's just I don't understand how the secondary market will work in terms of like, say I sell shares of one of my investment property. Like, how would I market that to you guys, right? It'd be a long process to explain to you, oh, it's on this street, it's close to these schools, close to the shopping, close to the highway. It'd take forever for like a $500 transaction.
Yeah, it's
like we were talking about the same problems that Addy has.
Yeah, it's all about the secondary market and how that's presented. And as the accountant brought up, it's just, it's difficult. We just face the hurdles that, somebody will overcome this eventually. And it'll be interesting to, sort of stay in touch with it all. That's what we try and do. That's why we dabble in so many different things, because it's just so interesting what's going on.
That's why you own one of everything.
Yeah, that's the running joke. I own one of everything, which
Every
I
crypto,
don't.
all 1,000 of them.
Yes, I just go onto my wallet every day and I'm like, I'm doing $1 in that. No, I don't.
But seriously, do you guys actually have any significant investment in cryptocurrency anywhere? Mining, Ethereum, anything?
Well, okay, so this is an interesting question as well, because the account was reticent to start with. He's like, I'm not doing this crypto thing. And we've kind of both worked into it a little bit. I would say I have a very, very small position in Bitcoin and Ethereum. I'm like same. Less than 1%. I think I'd like to get it to 1% of my portfolio, but I'm kind of working up there. But you mentioned mining, and one of the things, we are trading options, and Hut 8 is a hot like Canadian. It's a hot Canadian company that does mining. So that's been a cash flow strategy is trading options on Hut 8 because I like their business model, and I like that they have some underlying Bitcoin holdings as part of their market capital.
And I love the 150% implied volatility right now.
Yeah, the IV is off the charts.
The premiums are just glorious.
I'm the same. So for the listeners' benefit, if you're not familiar, when we're talking about volatility, the analogy I always go back to is insurance, right? Like take an individual's life insurance. If you're a smoker, you're obese, you drink 5 drinks a day, and you jump out of helicopters as a living for a living, right? Your premiums will be really, really high. So it could be 150 implied volatility, like, as an example. Versus if you're an accountant, you walk to work, you're a vegan, I don't know, then you probably pay very, very, very small insurance premiums, right? So Hut 8 that we're talking about is, they mine Bitcoin. So think of so for the listener who doesn't understand, traditional miners would be like gold miners. Well, these people just have computer rigs to create Bitcoin essentially, and that's their business, right? So then the underlying is really Bitcoin, because that's what they're that's what they're mining for. That's what they're manufacturing.
Yeah.
And Bitcoin is volatile as crap.
Yes, it is.
And so what I always tell people is I invest in real estate because it's not volatile. It's incredibly boring.
Yeah.
It's incredibly stable. So why would I want to hold something that's incredibly volatile? I'd rather get paid premiums on something that's volatile and they cash flow that way. Like, am I nuts? Am I the only one?
No, I completely agree. And I think you make an important point there with like the real estate portion of my portfolio is my foundation. Like that's the nice, safe foundation. The contracts I'm selling on Hut 8 are like the very nice hot tub on the deck. It's nice to have, but it's not structural to the basis of the house.
Yeah, so for the listeners' benefit, Hut 8, they're in Alberta, I believe.
Ontario, aren't they?
I think both.
Maybe both. I'm not sure.
Because they're getting cheap electricity from somewhere. So I thought it had something to do with the resource sector in Alberta. But anyways, Canadian Bitcoin miners, they're traded in the US. I was trading the US stock.
Same.
Same. Yeah. So I made like $400 in 2 days just selling puts.
Yeah. We're same thing. We're selling naked puts, running the wheel strategy. If you get exercised, then you just sell covered calls on it, right? And keep it simple. As you said, there's high implied volatility. So chances are, I think to the accountant's point, like we were talking about, or even yours, Erwin, the premiums are fantastic. Do they really move the needle at the end of the day? Are you trading, 3 to 5 contracts? It's great. You're making a few $100s. That's extra cash flow. But none of us, the accountant and I, was speaking for us, we're not throwing around giant amounts of money into these, speculative or volatility plays. It's enjoyable to keep up with it. There's some money to be made, but as you both said, is like have a core, foundation that you're not risking when you're dealing with these kind of options.
Like I would not ever dream of investing what I have in real estate into. Yeah.
Oh God, no. Could you imagine?
Bitcoin, magic internet money.
Yeah.
Imagine investing your home in it. Let's not even talk about that. Remember, folks, this is horrible advice.
Yes.
For the listener's benefit.
We're all drinking. How is your beverage there, Erwin?
It's quite nice.
Yeah,
quite nice. I don't drink often, but because I was having you guys on the show, I thought I need it.
Cheers.
All right, sorry. Apologies for the listeners who don't know. You guys are regularly enjoying adult beverage when you guys record your podcast.
Yes, of course.
So I thought when in Rome, when in Zoom.
Yeah,
that sounds terrible.
We if you weren't on the other side of Canada, we would have had you over to the garage for an in person. That would have been great.
Next time you're in Victoria, you can come by the garage and we'll brew beer and talk real estate or investing or anything.
Yeah, BC's my favorite province in Canada. Apologies to everybody else.
Yeah, don't keep telling people that though, because there's been too many people moving out this way. The island's getting a little busy.
A little. Canada's growing 1% per year. Right?
Yeah.
You guys probably get, about at least 10% of that. Probably around 40,000. No, you get more than that, I think. You guys probably get somewhere around close to 100,000 people in your province a year.
Yeah.
That's a lot of people.
And if we want to circle that back to the whole housing issue, I think the last stat I was looking at in 2019, something like 650,000 people immigrated to Canada, and we had 200,000 new housing starts. I wonder why we have a housing shortage.
Mm-hmm. And that's what I want beginners to understand, because beginners are always like, oh, real estate market's only gone one direction, up, so it has to come down, right? For it to come down, we have to have excessive supply and not enough demand.
Yeah.
Right. So, I'm not going to tell people what's going to be like, because I don't know expert. I have my own understanding of demand, immigration, and supply. and money printing.
Yeah, the money printing.
Yeah. Oh, so actually, fun useless fact of the day. If you just look at money supply, so M2 money supply, so money supply that from the U.S. Federal Reserve, 18 months from the beginning of the pandemic, 18 months later, money supply increased by 33%. That's a lot. 18
That's
months.
a ton of
That's
new
a
money.
ton. And then I just threw up a stat. Toronto real estate. I purposely chose detached homes, single family detached homes, because that's a hard asset in my opinion. Right, no different than a home, a single detached in Greater Vancouver area. Right, it's as hard an asset as you can really get. I'll bet you guys the same thing. Your prices have probably gone up around 33% over that 18-month period.
Yep, about that.
So then for the beginner, they have to understand that did real estate really get more expensive, or did it just need more dollars to buy it?
That's exactly it.
Right.
And another really interesting one is if you look back to the early 80s, when you were getting a mortgage at 18%, the actual servicing of the debt on your property at 18% interest rates is very similar to today. So the dollar value to buy the house got way more expensive, but your actual payment every month is very similar, inflation adjusted.
Interesting. And so remember, accountant, you were talking about how you bought your home 5% down, 40-year amortization.
Yeah.
It's actually makes sense that the Trudeau government will say, hey, we're going to try to make housing more affordable. We're going to go back to 40-year amortization.
Yeah.
So if that happens, folks, list to the listener, what do you think real estate prices are going to go? If the monthly payment becomes more affordable, where's prices going?
That way.
Right. Yeah. Yeah. For the listeners' benefit, their point was pointing north.
Yeah, it was unanimous.
Yeah, right.
Yeah.
Right. Because again, it comes down to monthly payments. So super cool you guys are doing stock options because a lot of real estate investors are actually know a lot of investors who are like not for public markets, not for stocks, anything, versus you guys are open-minded to it. You guys are actually have significant positions in stocks, ETFs, and some play money with the stock options. How do you guys get started in that?
Well, I think a lot of that comes from, let me just sort of back up a little bit here. It's about 10 years ago that I sort of found the FIRE community to bring that back into the discussion. And the real sort of mindset that surrounded that was building a passive, low fee ETF index portfolio. Live below your means. Don't sacrifice, but make sure you're paying yourself first. The same story, the wealthy barber story, but up that savings rate substantially. And and then by investing steadily over time, you're capturing your dollar cost averaging into the market. You're globally diversified. Just as we've seen, as you mentioned, the increase in property prices, we've seen those gains. We've been in the longest bull market ever. But regardless, if you're invested for a long period of time, you're going to eventually make money if you stick with it and a high savings rate. So that's why I ended up with a bigger position in the public markets, just because it made more sense to me. I didn't have the capital to start off in real estate. And as I mentioned, I didn't know how. So that's how it's sort of been a long play for me the last 10 or 12 years, working up towards that with the highest savings rate that we could generate in our household.
Yeah, and I think for me it was just the diversification factor. That, and I'm interested in that kind of stuff. Like I like all forms of investing. I like to dabble in a little bit of everything, and I think property and real estate is great, but I also like having that exposure to when the market goes insane and goes up 20% in a 7-month period. I want some exposure to that. And I think it's also on the flip side of when you need cash. It's nice to have some money in the market that can be easily liquidated if I need it for some reason. And I think that's I have HELOCs as well, which I find are a very good source of cash when you need them. But sometimes I like having that money at work. And if I need to pull it, I can pull it. And it just gives me another level of diversification.
So gentlemen, mechanic accountant, we're running out of time. I so much appreciate you guys coming on. Accountant, you mentioned that you're leaving your day job soon. Can you give give some context behind it? Like, are you living like a balling life? You're gonna get off the show and go back to your yacht, or are you like living below your means type thing, like the mechanic was just talking about?
I wouldn't say I'm doing either ends of the spectrum. Like I have a pretty relaxed lifestyle. I I like to drink a lot of beer. I have a boat. I like to go fishing on my boat all the time. But at the same time, it's nothing super extravagant. So I definitely always try to spend less than I earn. I've always done that. My wife still works right now, so I'm still kind of cheating on that one. We could probably get away with her not still working, but she still likes her job. But I don't ever see a day where I'm not earning money. I'm just simply stopping a 9 to 5. And I'm going to take back my time and kind of see where we go from there. Who knows? Maybe the next time you talk to us, the mechanic and I will have a brewery going, and I'm sure I'll be busier than ever.
A quick question on the business of the brewery. Like, what kind of capital investment, and do you guys have like a payback in mind and a return?
This is a hot topic of contention at the moment because, see, I'm the hands-on guy, right? I am the money mechanic. I understand how to build things. He is the spreadsheet guy. He is the accountant. So he's crunching numbers, and I'm like going, we got to do this. We got to weld stainless steel. We got to put in ventilation. Like, so I think we're in a little bit of odds at the moment of agreeing. But accountant, you can say what you think our numbers are going to be. And let's keep in mind that we're talking small scale here.
We're talking a very small scale. I'm trying to get an industrial space in an industrial space that a friend is buying for his business. So we're talking like 40 grand startup costs, nothing super serious. But we're talking about a nano brewery producing 250 liter batches, not your standard big size brewery.
Got it. Okay. So yeah, really small. Okay. Got it.
Yeah. I'm closer to the 100K number, but
you can't trust him on numbers though.
Yeah. Well, so funny story to end the show here. I know we're out of time, but so I lean on the accountant a lot because he is much better at the real estate game than I am. And he did an awesome spreadsheet for me when I was doing some projected costs. And I was sharing it with some listeners because we had a common investment that everybody was interested in. So I went in and changed the spreadsheet a little bit because I had to change the numbers. So I sent it out to a bunch of people, and the account was on the email, and he quickly texted me and he said, I trust you to fix the brakes on my truck. You should trust me to build a spreadsheet. Don't ever change a calculated cell.
He had broken all of my calculation links, all of them.
Yeah, you locked that down.
I know. I should have known better.
Yeah.
Can't trust people with your code.
No.
Accountant, sorry for the, you probably explained it on your show, but for my listeners' benefit, like, are you in the financial industry? Can you touch on that at all?
I'm in private accounting. Like I run a company, so I'm the controller of a company at the moment.
Got it. Okay. And hopefully people can appreciate why we're using pseudonyms, because
yes.
Yeah. It's not the first time for this show. I've had past guests, they had plans for resignation, but they hadn't made it public yet, so we couldn't share their names on the show. Totally understandable. I think it's much more important that your story is shared and what's working for you, because you guys have what a lot of people want. Like, you have your freedom, you have your time, you have your health. All these people like waiting till 65, maybe 75 to get a slice of what you guys got.
Yeah, I think it's never too late to get started. It's about being consistent, and it's about being mindful. And one of the things that the accountant and I and the economist in our show, and something that it takes a while to learn to spend on what you value, and understand where your money's going and what you want it to do for you, and how you can put it to work, right? And it's just been a learning process for us. And we don't live extravagant lives, as you brought up, but we don't want for anything either, right? So for us, it's about using our time the way we want to use it, right? Not necessarily having that big yacht. So
super awesome. So I always like to give a portion of the show for my guests to talk about anything they want, share whatever they want. Any famous quotes you want to share, or words you live by, anything? The stage is yours. The mic is yours.
I would say the most important thing for people in real estate investing, stocks, options, whatever it is you're doing, is know where you want to get to. because all of these are tools and you need different tools to do different jobs. So think, mindfully about how you want to design your life and work backwards from there. And you will have great success if you follow that path.
That's pretty good.
You've
Sorry,
never said
mechanic, you have to follow that.
he's never said that to me. I feel so inspired right now. I really can't follow that. I was a little bit, it's hard being on this side of the mic because you put me on the spot a little bit there. But I kind of roll back into what I've been learning recently is it's much more about your psychology. It's about learning how you think, how you make decisions, how you can make risk adjusted decisions, how you view risk. It's really about what I've come down to, and the books I'm reading recently are trying to get better at understanding myself and how I make decisions. So that's sort of something that my advice would be for everybody, whether you're investing in stock markets and real estate and in crypto, whatever, know yourself. And I think that ties into a little bit of what the accountant said is kind of know where you're going as well. And you need to look in, you need to be introspective and need to understand that. And if you have a partner, then you need to be on the same page. You need to be open and have that discussion.
Mechanic, can you share some book titles that you've been reading on subject lines?
For sure. Yeah. Well, as I mentioned earlier, Annie Duke is one of my favorites right now. I read Thinking in Bets, which was eye-opening for me. I just finished reading Black Swan by, I'm going to stumble on the name here, Nassim Taleb. Yeah. And I'm actually reading his other book, Anti-Fragile, at the moment, which is really interesting. And I like the way he sort of wraps it in here that a lot of us build things on the bell curve, but we don't take into account the extremes. The Black Swan events, that the guy's house that burnt down. Well, that's unpredictable. That's an outlier, right? So again, that wraps back in is learning yourself, like trying to think of, we have these unknown unknowns, right? But how do you weigh that into your decision-making process? So right. Those things I'm digging into right now.
That's pretty cool because you guys are kind of outliers. No, people don't go fire in their 30s and 40s.
People are doing it. I think
happens.
The nice thing. Okay. So I've always said on our show that fire may or may not happen to you in your 30s, but by learning about it, you're probably making better financial decisions right away. It's going to have an impact on your life right away. You may want to retire at your 35, but we said on our show too, is you need to retire to something. Right? You don't just quit your job one day, walk out the door and be happy, because that's not how it works. You need to design your life and be happy with it, with who you are, where you're at, and where you're going. And then work is what it is. Maybe it's just a vehicle to get you to financial independence, but you need to know what you're going to do afterwards.
Amazing. Thanks guys so much for coming on the show. And where can people follow you? Snapchat and TikTok? You guys on that stuff yet? No. You guys are leading edge,
Well, we leave the YouTube all up to the economists. So you can find us on all the regular podcast channels. It's figarage.ca. We have a half-ass website because I'm the web designer, but clearly it's not my specialty.
Yes.
I think we're most active on Twitter. I think I'm money_mechanic at figarage, and accountant, you're on there too, and so is the economist.
Yeah, I'm the @FI_accountant, and I believe the economist is just the FI Garage. But yeah, I don't know if he ever does anything. So
I know
let's just throw him under the bus.
Yeah, he speaks for the whole show, but yet he couldn't even show up today. So who knows? But he's a man of mystery, and we like that about him.
Hey, he's a man of freedom too, apparently.
Yes.
Gentlemen, thank you again.
And, thanks for having us.
Awesome time. Thank you. Thanks so much for doing this.
Cheers. Fun chat.
Thank you for listening. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy in a virtual free training class every month. Go to investortraining.ca/podcast to register for our next class. I publish an episode here every week, so subscribe if you want to keep learning from seasoned investors like myself and my guests. Again, if you're ready to learn the nitty-gritty about real estate investing, register for our next free virtual training class at investortraining.ca/podcast. Again, thanks for listening to the show. Talk to you next week.